What happens when a government spends years labeling property investors as speculators and villains, only to realize that they desperately need those same investors to solve the housing crisis? Well, that's exactly what's happening in BC right now, and it will create a fascinating market shift in Surrey and the Lower Mainland real estate market. If you've been following the political theater over the last few years, as our government stripped not only homeowners, but landlords' rights from their properties, this video will show you how David Eby's dramatic policy reversal that caught the industry off guard will affect housing prices, creating unique opportunities and potentially change the rules for both landlords and tenants in ways that could benefit the landlord once again. Only get one chance to buy or sell your next home. Let's get it right. You know what's crazy? For years, our government has been telling us that real estate investors were the bad guys, driving up housing prices. But now they're singing a completely different tune. Let's look exactly at what the BC government did to discourage real estate investment over the last 7 years or so, starting with David Eby's war on what he called speculators. Remember when the government rolled the speculation and vacancy tax in 2018? That was just the opening move. Since then, they've kept tightening the screws, scraping things like fixed-term leases, or at least the essence of a fixed-term lease, or extending the notice period for landlord use evictions to over 3 months, and capping rent increases based on what the province allows. The message was crystal clear. You're investing in real estate, you are part of the problem. But nothing hit investors quite like the anti-flipping tax that came into effect January 1st of this year. This wasn't just a small inconvenience. It fundamentally changed the economics of real estate investment in BC. If you bought a property and sold it within 2 years, you'd face a brutal tax of up to 20% of your profits, should there even be any. But the government essentially decided that if you weren't planning to hold a property for at least 2 years, they didn't want you in the market at all. But the residential tenancy changes mentioned earlier were even more devastating for small landlords. Remember when fixed-term leases were a thing? Now they're essentially gone. Landlords used to have the ability to set new terms at the end of a lease period, but that flexibility disappeared, and the rent increases, well, they've been capped well below inflation rates. In 2023, when inflation was running around 6 to 7%, landlords could only raise rents by 2%. This year, it's 3.5%, still not keeping pace with the rising cost of maintenance, property taxes, and utilities. But here's where it gets really tough for landlords. Eviction became nearly impossible, even when you needed to sell the property. The BC government introduced a 4-month notice period in July 2024 for landlords wanting to sell tenant-occupied properties, meaning that a tenant needed a full 4 months notice to vacate and find alternate accommodations prior to that unit being available to occupy by a would-be homebuyer. This just simply was not going to work, and after pushback, they reduced it down to 3 months, but that still created a mortgage approval nightmare for buyers. Why was this? Because most mortgage rate holds only last 90 to 120 days. So if you're buying a tenant-occupied property, you might secure your mortgage rate today, but by the time the tenant moves out 3 months later, your rate hold has expired. Now you're stuck with whatever higher rates are available, or worse, you can't qualify for the mortgage anymore because rates potentially have gone up. This misalignment between government policy and mortgage lender requirements has created a situation where buyers simply avoid purchasing tenant-occupied properties. It's just too risky and complicated. So what was the result? Landlords are just plain done with the rules set and are fleeing the market in droves. Here's the shocking numbers. From January to August of 2024, about 7% of the properties sold were tenant-occupied properties. But from September to December, this number jumped to nearly 11% just after the new rule took effect. That's a massive increase in landlords deciding that it's simply just not worth it anymore. And now, when tenant-occupied properties do hit the market, they're selling for an average of $18,000 below the asking price. They also sit on the market for 46 days versus 36 days for vacant properties or owner-occupied properties. That's an extra 10 days of carrying costs, mortgage payments, and stress for the sellers, or in this case, the landlords. The worst part, These tenant protection policies were sold to you, the public, as ways to make housing more affordable and create more rental supply. But they've done exactly the opposite. As landlords exit the market, the rental supply has actually shrunk. And what happens when supply goes down? Rents go up. It's like the government took a sledgehammer to fix a watch and then acted surprised when the watch stopped working. They created a system where being a small landlord became so financially risky and unprofitable that many reasonable people just decided to get out completely. After using this sledgehammer on the rental market, the government finally realized that the clock had stopped. In a move that shocked industry insiders, Premier David Eby, the same champion of anti-speculator policies, is now courting those very same investors his government spent years pushing out of the market. At a recent meeting with the BC Real Estate Association in Victoria, Eby made an admission that would have been unthinkable just months ago. The Premier acknowledged that real estate investors play a valuable role in our housing ecosystem, a stark departure from previous characterizations of them as the market villains. So what's behind this dramatic change of heart? Well, the housing crisis has gotten so bad that the government can't ignore the consequences of their own policies anymore. They created a rental market where landlords are fleeing, and now they're scrambling to fix exactly what they themselves broke. Eby's specific pledge to boost protections for landlords at this meeting represents the most surprising shift. He's now looking for ways to help small-scale landlords participate in rental housing without the extreme risks they currently face. Addressing families who invest in multiple homes, he asked, can we find a vehicle where they would be able to participate in rental housing, building purpose-built rental housing with professional management and insulated from some of those impacts that they're worried about in terms of the behavior of a particular tenant? This concern about landlord protections comes from the same government that made it nearly impossible for property owners to address problematic tenants. The Premier even acknowledged that landlords have legitimate worries about property damage and non-payment of rent, concerns that landlords have voiced for years while the government implemented increasingly restrictive policies on them. The data behind this policy reversal tells us a sobering story. BC tenants are spending 53 to 63% of their income on housing in major cities, while provinces without rent controls like Alberta and Saskatchewan see renters paying just 27 to 41% of their income. This stark contrast has forced a painful realization. BC's approach just simply isn't working. For small landlords in British Columbia, the math has stopped making sense. Variable rate mortgages increased from about 2.36% in early 2019 to approximately 5.95% by January of 2024, and still remaining significantly high today, albeit they have come down a little bit. Meanwhile, rental increases have been capped well below inflation, creating an ever-widening gap between cost and income. Property taxes in BC have surged, with increases of 12.5% in 2023 and another 7% in 2024. When combined with rising mortgage costs and compared to the mere 3.5% allowable rent increase, while inflation sits at 5.6%, it's clear why landlords are giving up selling their rental properties. The government's newfound concern for landlords isn't about ideology, it's about desperation. They've watched rental supply dwindle as property owners calculate the numbers and head for the exits, creating fewer rental units and skyrocketing rents. For investors paying attention, this signals a potential opportunity. The government is indicating a major policy shift before most people have caught on, potentially creating chances to get ahead as rules become more favorable to landlords and investors. Market experts note that this policy reversal acknowledges what property owners have known all along. Without meaningful landlord protections and reasonable returns on investment, rental housing supply will continue to shrink, worsening the affordability crisis the government claims that they are fighting. So what does this all mean for you watching this video right now? Well, market experts are suggesting we could see a gradual stabilization in Surrey and White Rock's rental landscape, among other areas in the Lower Mainland. Landlords who have been gritting their teeth through these challenging years might finally exhale as these policy changes come to life and make them feel more secure in their investments. But here's the thing, this potential turnaround comes with a significant caveat. If the government doesn't take actual action, addressing the fundamental issues that drove landlords away in the first place, we might continue seeing rental stock disappear. making the housing crisis even worse. If you're an investor looking to buy in today's market, take note of that new 3-month notice period when purchasing tenant-occupied properties. The timing can directly impact your ability to secure financing, especially since most mortgage rate holds only last 90 to 120 days. Stay vigilant about future regulatory changes too. They'll continue shaping both the market dynamics and property values in ways that create winners and losers. The savvy buyers who understand these shifting policies will be the ones who are finding opportunities while others are still trying to figure out what happened. As you've likely gathered by now, BC's real estate policies change fast, and if you're not ahead of them, you're already behind. Whether you're an investor or a first-time buyer thinking about entering the market this year, the next video is one that you can't afford to miss. It's the exact strategy session we give our clients, the one that helps them avoid costly mistakes and come out ahead. If you want to buy smart, dodge the bear traps, and eventually win in this market, that's where you're gonna wanna start. Click through, it's the video that's coming up next. When you're buying a home, you really never know who is giving you advice. And that could be true for somebody like me, where you're watching this on YouTube, but that can also be true